What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I'm the bearded boy wonder, Dave Bartosiak, and today, my friends, it's the good, the bad, and the ugly weekly trade review. Now, before I get into that, super excited. You guys already know, tomorrow morning, the live Q&A. Not only is it going to be the live Q&A like we always do, we're going to have a follow-up to that Applied Optoelectronics earnings. But I threw a few $100 in an account, and you guys are going to see live trade entry. So for people that have questions about, how do you leg out of a trade or get into a trade or whatever, we're going to be live in an actual real account. It's not a huge account. Just threw a few $100 in it so you guys can see. But still, so you can see the order entries, because I know a lot of you guys have some questions, and we're going to do it live. So it should be very exciting. I'm looking forward to it. And I think we're going to make some money because so far we're looking pretty good. So all that and more tomorrow. Can't wait. But first, let's talk about what happened last week, the last couple of weeks. Here we have Qualcomm and a bearish put spread we had on Qualcomm. So we were long the August 18th, 52.50 put spread for a 66-cent net debit. Max profit with shares of Qualcomm under 52.50. The spread's trading at 163 with Qualcomm under $53 right now. So basically, we're just going to keep on catching this drift. We got another couple of weeks. Hopefully, this can continue to break down. Okay. Plus, we have a risk event coming up here tonight that I think maybe could put tech under some pressure tomorrow. So overall, just keep catching this drift. Then we had a bullish call spread on Skyward, SWKS. I know I kept flipping around the K and the S, but this time I got it right. We were long the August 18th, 105, 110 call spread for $2. Now, initially, max profit obviously here with Skyworks over 110. We were big time in the green as Skyworks rallied, but since then, now it's come down all the way to 101. The spread's down at 70 cents now, so probably should have ripped it early on. Of course, hindsight's 2020. We didn't get the drift. It started to give some back, but I think that's because there's some larger event risk here in the market. Cut bait. What the heck, man? It's just a head scratcher. Like I said, we were up. You're going to see this theme happening here further. We're going to talk about it some more on these other ones. Here's AMD. Same scenario. Bullish call spread. Long the August 18th, $14, $15 call spread for a 41-cent net debit. Maximum profit with AMD over $15 holler. Now the spread's down at 14 cents. AMD's at 13.20. Stock was all the way up at 15.78 in after hours following the earnings report, and since then it's just been giving back. Something's happening in the chips right now, and it's translating on through to the NASDAQ, and I think there's a little bit of risk here. Honestly, there's some talk about trade war, U.S. versus China. I know that sounds kind of overblown, but this is serious. This is what the risks are in the market right now that we're dealing with. So chip makers are not holding in that well. Still going to have to hold this, wait to weather the storm. We got a couple of weeks. Then we had an iron condor on Apple. Now, just like our iron condor on Amazon and Google, it's going to be close. But we were right on both of those, so that's good. Here we're short the August 4th, 155, 157 call spread and 143, 144 put spread for a 65-cent net credit. Max profit with Apple between $1.43 and $1.55. We are scraping right up there. So right now the spread's at 105. We're in the red a little bit because Apple's at 155.50. It only needs to close under 155 for the Condor to cash out at the maximum gain. So we're going to keep an eye on this one. We're going to hold it, hopefully through expiration. Now here's the thing. If it gets to be tomorrow towards the end of the day and it looks like Apple's going to close above 155, you have to close out. I repeat, you have to close out the short call spread. The 155, 157, you have to close it, okay? So the way that you're going to do that pretty much is the 155 might be in the money, so you're going to have to buy that to cover. You can ignore the 157 because you're long that anyway, so don't worry about that end, okay? And we're going to talk about it again live tomorrow, so make sure you join us. So that's the iron condor and Apple. We're getting pretty darn close. And then we had a bearish call spread on Tesla. Short the August 4th, 342.50, 345 call spread. We got 50 cents for that risk. Max profit with Tesla under 342.50. Tesla's rallied today. The spread's all the way up at 180 with Tesla at 348. But it is on the south side of 350 and has stayed there throughout the course of the day. So we're hoping that this is going to fade a little bit tomorrow. So again, I hate coming in here and saying hold and hope, but hold and hope, because that's a scenario playing out for Tesla. So that's where we're at. And then, of course, we've got Applied Optoelectronics. That trades on right now, the 93.99 call spread. If you have that and you're in the money, I talked to a couple of people in the chat room that you should just go ahead and rip it. But right now, since you guys are going to be seeing this Thursday night, we're going to see what happens tomorrow. So tomorrow morning, guys, join me up for a live session. It's going to be awesome. I'm opening it up to everybody tomorrow. So tell your mom, tell your cousin, tell your friend, tell the guy down the street, your uncle, whoever you want to bring. Bring him tomorrow. It's going to be a fun one. All right, guys. So thanks so much for hanging out with me here today on The Good, the Bad, and the Ugly. I will see you all mañana. Have a good one.